Hey, and welcome back to another episode of Agency Highway. Today is a long overdue interview with a friend of mine who I've been hanging out with at co-working spaces for years, Jason Andrew, who is I want to say bookkeeper slash accountant, but you're like so many friggin' things now. You're an author. Uh, and we're going to be talking about profit metrics and how to know when to hire an employee, whole bunch of stuff. But before then, Jason, give people a little bit of intro about you.
Hey, James. My name's Jason. I'm a chartered accountant by background. I've, cut my teeth at global accounting businesses or accounting firms in the past. 3 years ago, I started my own practice called SBO. So what we do is bookkeeping is a component of what we do, but we also do a thing called what we call operational finance, where we partner with a lot of high growth businesses to help them manage the numbers, basically. So going over their profit metrics, going over their cash flow, helping them make decisions using their financial data to inform good decision making, basically.
And you guys have been doing our bookkeeping for years now, which is awesome.
Almost since the beginning, basically, since we started.
Yeah, and it's one of these things, I always see so much reluctance to spend money on stuff. And I think that's one of those things that I'm just so glad we did, because the only time I go into Xero now is to send an invoice, generate an invoice. That's literally the only thing I do. And then occasionally I answer a couple of questions if there's things you didn't know about. And it's usually three questions every few months. And it's so easy. I don't have to do anything. I love it.
Yeah, well, we try to make it really hands-off for people to just go ahead and just run their business and do awesome podcasts like this. So.
Yep, that's it. Do the stuff I actually like doing.
Exactly.
All right, so we just actually recently had an episode where we talked about profit metrics, but I think it had a pretty big a USA swing to it, using metrics that Aussie companies don't really use. But I know, I guess probably the more practical stuff is using metrics to know when to hire. But is there anything you want to dig into first about what metrics we should be looking at?
Yeah, I think that a big from my experience, a lot of founders don't really struggle to understand the difference between profit and cash. So that's a huge part of understanding the numbers. So, everyone I'm sure has an accounting system, whether it's a spreadsheet or a Xero or a QuickBooks or something, and everyone just looks at the profit and loss, right? So profit and loss, it's oh, cool, I made X amount of profit this month. Awesome. I'm going to give myself a pay rise. And what they don't realize is that, oh, wait, there's profit, but I'm actually owed a bunch of cash from my customers who haven't paid me for 3 or 4 months. And so what's happening is I'm drawing cash from my business, which I don't actually have. And so that's a classic mistake, and just where accounting also is not also true, because the profit and loss everyone thinks is the source of truth, right? But profit and loss is actually really misleading to look at. You should be looking at the cash flow statement. Yeah.
Right. And is that because the profit's generated when you raise an invoice and you don't necessarily have that money yet? Why?
Yep. For agencies, that's the classic example. Another really important example is your own salary, for example. So, everyone I'm sure listening has a tax accountant, right? So they've got a CPA that does their annual tax lodgements. And depending on what your company structure is, you might be trading out of a company, it might be a trust, or it might be a personal ABN. Your tax accountant might actually give you advice as to how much you should pay yourself to declare as a salary, right? Because there are tax advantages of saying, hey, James, we're going to pay you an $80,000 salary on PAYG. And yeah, you can pay yourself more, but we're going to treat it as a trust distribution, or we're going to pay it as a dividend instead. Yeah. So what they say is, hey, we'll put you on payroll for 80 grand a year, but every month you can also take a bit more, but we're not going to expense that on the profit and loss. We're just going to put that to a thing called a loan account on your balance sheet.
Right. Yeah.
So automatically, because you're not expensing that extra cash that you're taking from the business, you've got an inflated sense of profit, right? Because you're thinking, well, my expense for my salary is only $80,000. That's cool. But you're actually taking an extra, say, $2,000 a month out of the company, which is not reflected on your profit and loss, but it is for cash flow. So this is these small nuances which really can misguide or give yourself false sense of security almost when looking at numbers.
Yeah, right. And this kind of makes me laugh because I know I've been in this situation so many times where I'm looking at the P&L and we've been making profit month over month, and then I'm looking at the bank and I'm like, oh, like, where's our money? Like, did someone steal it? Like, I've actually thought that before. It's so I can totally relate. I guess that's where I'm going with that. And it's so I guess how do we look at it? Like, what is it? The cash flow statement? Is that the source of truth? Is there more than one source of truth?
Yeah, it's really funny. So everyone asks us, well, it says my profit and loss. Hey, let's say it says my profit and loss is I made $100,000 profit last year. It's like, well, where the hell is the cash? Right? Is the next question. I don't have 100 grand in my bank account. Where the hell's it going? Yeah. And the assumption is, hey, the bookkeeper stuffed something up, right? You're not doing your job properly, or something's not reconciled. I'm like, no. Okay, if you actually look at the balance sheet, which is the report that confuses the hell out of most people, and even including myself, because it's not always reflective of the truth, but the balance sheet is actually where your cash is, right? So generally for agencies, the cash will be in two main accounts. The first one will be in trade accounts receivable, or trade debtors is the other term. That's money owed from customers. That's right. The biggest part. The second part where the money's gone is a thing called a director's loan account. So what that account is where all of generally it's the money that you've ripped out of the company, which is in addition to the salary that you're already drawing. Or it's, I might pay a mortgage repayment via my company this month for my personal home. Or, hey, I decided to buy a Range Rover that I put on lease. Don't worry, the company will pay for that, no problem. So your accountant / bookkeeper will say, well, obviously the Range Rover isn't for business use. We're going to put that to your loan account. And so that's where your cash is in your balance sheet account. So as a really good report to look at for agency owners and business owners generally is generate a cash flow statement. Yeah. So what you can do is in most accounting systems, you can generate what we call a cash profit and loss. So most profit and loss statements you'll look at are on accruals basis. Now, what I mean by accruals is it'll reflect when you raise a sales invoice, that's recorded as income technically for accounting, even though you haven't collected the cash. If you generate a report on a cash basis, it actually shows your position on a cash received and cash paid basis. So that is the source of truth because it's not skewed by any nuances of balance sheet adjustments and the like. So cash flow statement is the source of truth, and the thing is you can fudge accounting. So I've heard about Enron and all these big corporate companies that deceive shareholders and investors by fudging the accounts, by creative accounting.
Right.
You can fake profit, but you can't fake cash. And that's why cash flow is always a source of truth.
Okay. I don't know, just given that we're talking about cash and accrual, I will request that you please stand up into shot on video. If you are listening to this on a podcast, Jason is wearing a shirt that says "It's a Accrual World."
Accrual.
Yeah, you say it. Man, I hate that word because I can't say it. But man, you guys have so many pun shirts that I love it. It's like the best accounting / bookkeeping swag I've ever seen. Absolutely killing it.
We also have Be Audit You Can Be.
Be Audit You Can Be, yeah. Love it.
And there's actually, and there's super accountancy jokes that I think non-accountants would understand. So there's one called, we're producing another batch, but there's like DTA, DTL, DTF. Like DTA and DTL are very, very like accountancy in jokes. Like most people would understand what they mean, but anyway. So
wow, that is
producing.
Awesome. And I remember there's a hoodie too that's just like this enormous paragraph of text about, I can't remember what it was, but it's just funny because it's so long.
Yeah, well, it was a ripoff on is it Wu-Tang, the Cream song, Cash Rules Everything Around Me. Anyway,
right.
I'll put in the show notes.
Yeah, absolutely. Go check out the show notes and have a look at some of their swag. It's amazing. I wish I was that creative. Anyway, let's dig into the other thing we're going to talk about, which is like hiring employees, how we know we should be hiring someone, whether that's our first employee or our next employee. Maybe they're different metrics. Let's talk about that.
Yeah. So the current narrative of when to hire an ex-employee. It's just a super subjective conversation. There's not a lot of data and even advice around if you should hire more people, right? And I think fundamentally it comes down to what type of business do you want to run? Do you want to be just a solopreneur, freelancer type of guy that just runs around, does kind of website builds and treats a very casual lifestyle business? Or do you decide to become a small business or act like an entrepreneur where you're building an asset, you're building a brand, you want to surround yourself with smart people to build a business, per se, right? And so that's the first question I ask most people. And probably the listeners of this podcast want to be the entrepreneur, right? We all want to build an asset. We want to build an agency that's more than myself, because I don't want to be doing websites for the rest of my life. I want to be able to, have a website business, but allow me to go on holidays and whatnot, right?
Yeah.
So that's the first thing. So then the next question is, okay, if I start for myself and I'm working and I've got a bunch of retained clients and I'm getting paid well, the challenge then is like I'm getting flogged, right? I'm working stupid hours just to deliver on those client deadlines. And yes, I have content there to help me, streamline the automate or the chasing, but it's still like I've got a lot of projects I'm tearing my hair out, right? So the decision then is like, crap, I need to hire someone. I need help. Like I need to lean on an employee so they can help me do this work so I can focus on other stuff, etc. And so generally that decision comes from just being busy, right? It's like, okay, I'm busy, I need to hire. And that's the automatic assumption, right? What I find is there's not really a lot of data to inform if you should or when you should that employee. So generally what we say is there actually the problem with hiring more people is obviously costs go up as well, right? So you got payroll, and if they're full-time employees, that's a big fixed monthly cost that comes out of your bank account. And irrespective of how much work you've got on, irrespective of its holidays, irrespective of whatever, if there's natural disaster that cleans up your office, you still got to make the payroll. That's cash flow, right? It's a big expense, and people are the biggest component of cost for every agency. So it is, people take hiring really lightly, like, oh, I just need to hire more staff and it'll be better. But my view is like, dude, you should try to hire at least people as possible, or at least be smart about who you hire and do it slowly as opposed to just hiring. Because I guess too many times you hear about companies that like scale their revenue and they just employ a huge bunch of people, and they think from all the, I guess, vanity metrics of success is that they're going really well, right? So you're growing revenue, hiring lots of people, you must be profitable, right? The reality of that is that these companies are not profitable. In fact, they're burning cash because they don't understand their hiring economics, right? So so there is a ratio of what revenue you should have to cover to generate an ROI or return on investment in every employee that you have. So if you think about employees as an investment, there are costs that's going out the door. Say you pay someone $5,000 a month, right, for a salary. They need to generate a profit too. Whatever work they do, you need to generate a profit on that person. So the magic ratio is that you should be generating a revenue of 2 or 3 times the cost of that employee. So what that infers is if I pay someone $5,000 a month, they need to be servicing $10,000 to $15,000 of monthly revenue to generate a profit on that person. And that's like direct billable hours sort of thing? Or? Exactly right. Exactly. Yeah. So direct billable hours. And so what that implies is that I've got sales using the 2 times multiple. If I've got $10,000 of revenue, they cost $5,000. I'm basically making a 50% gross profit margin on every employee that I have. Right? Now, what I've found empirically is most people don't think about hiring from an economics perspective. They think about hiring from a business perspective, right? A lot of subjective, a lot of emotional whims involved in that decision making. Like not coming down to, okay, can I afford to hire someone? And if I do, what is the required revenue I need to cover the costs and generate a profit on that person? Yeah. Nice. So it's that simple. So in that case then, like, what if you, does that mean you need to be generating this profit yourself, for example, if you haven't hired yet? Like, how do you know? And then when you have employees, how do you make that decision? Is it like you've got some projects coming up that is going to give you that $10,000 and it'll be done in a month? So this is the question of when to hire, right? So what you should try to aim for, there's actually two metrics. So what you should try to aim for is if I've got committed revenue, so ideally you'll know your pipeline of future sales, right? Well, at least 2 months in advance. I know it's forecasting is almost impossible, but if you can say that, how I've got, 3 or 4 large chunky projects over the next couple of months, there's going to be a recurring revenue component of those because I'll start to manage their SEM or whatever. You'll have a certain degree of certainty that yes, there will be at least X amount of dollars cash of revenue coming through the door, right? So if you've got that, I assume that you yourself should already be a profitable business. So if you factor your own time, your own salary that you're paying yourself, you should have profit left over. If you're paying yourself an average salary and not too much, but not too little at the same time, and you have profit, you need to basically understand, is that profit going to be reinvested back into the business to hire someone else to then that person? So it is very delicate in terms of how you time it, but the ratio is, again, if I've got forecasted sales over the next couple of months, which is at least double the cost of a new hire, that's the first metric to look at. So, the 2 or 3 times ratio. Second metric is cash, right? Do I have the cash to actually hire them?
Yeah.
And that's the hard part. So what my recommendation is you should have at least 2 months of that employee's wage as cash in the bank. So if I'm going to employ someone for it's going to cost $5,000, I should have 10 grand in the bank account that I'm willing to deploy to cover.
So I've seen a good idea with this. Well, at least I think it's a good idea. You might say not, but the whole profit first thing, where you have multiple accounts that you're putting money away for tax, and like operational expenses and that sort of thing. You can create an account for future employees and literally just be putting aside a certain percentage of your revenue each month or whatever into this account, which slowly builds up to this dollar value that you just have sitting there and potentially growing, so that when you do hire, you've got that little buffer. Obviously, though, you don't want to just burn through that cash. You want to have the incoming jobs. And something you actually touched on there, Jason, was the recurring revenue. And this comes up all the time on this podcast. I mean, everyone's talking about it because for good reason, and because it gives you some level of stability and knowledge of the money that's coming in. So it's very, very important to have some level of recurring revenue in your business, so that you just know what's coming, and it gives you peace of mind when you're hiring too.
100%. A recurring revenue is king, as I'm sure we all know. My view on recurring revenue is, I've got a recurring revenue business. So do you, James, and so other agencies listening probably do as well. How I see recurring revenue is that the recurring revenue should at least cover the fixed costs of your business.
Yes.
At the minimum. So, it covers the payroll, it covers all your rent, etc. And then the project revenue sit on top is the cream, right? So if you look at the valuation of the company, how a company is valued is future cash flows, right? So what is the stability and viability of this business and its ability to generate positive cash into the future? And they do some funky finance math to discount that back to a value, and that's the value of a business fundamentally. And so the more recurring revenue, more contracted revenue you can build into your business, the higher intrinsic value that you've got in your company, which means that you'll have better cash flow and everyone's happy, basically. So, yeah.
Awesome. So if you are listening to this and you want to come up with some ideas on how to create recurring revenue, jump over to agencyhighway.com and search for Troy Dean. He's been on a couple of times. One of them was about building recurring revenue in your agency. So check that out. Jason, is there anything else you think we should dig into here?
I think that so we covered hiring, which is a big one. We covered cash flow, which is important. And I think what I really want to maybe touch on is probably helping understand what type of business you want to be building. So I think a lot, let's say the guy Gary Vee, right? So obviously runs a big media agency, and he talks about scaling his empire, and he's got like hundreds of $millions in revenue. He's got thousands of staff and headcount, and that's really nice. And he's obviously built a very big personal brand for himself. But in my view, all of those are vanity metrics, right? Like, just because you've got heaps of revenue, just because you've got heaps of staff, just because you've potentially raised a bunch of money, doesn't mean you have a successful business, right? Yeah. There are plenty of there are plenty of businesses that have all three and have like gone bankrupt.
Theranos, pretty good example.
Yeah, exactly. Have you read that book?
Oh my god, it's one of the best books I've ever read.
I smashed in in less than a day because it was
and I will link both of these up in the show notes because Bad Blood is one of the best best nonfiction books I've ever read. It was the kind of thing where I wouldn't go to sleep because I wanted to read the next chapter, like in suspense at just how ridiculous the whole situation is. Yeah. It's about a startup. It's totally off topic, but I need to talk about this because it's freaking amazing. It's about a startup called Theranos out of the US that at one point was valued more than Uber, and basically it was all a complete freaking fraud, which is just insane. It's like if you've heard of the Fire Festival docker, it puts that to absolute shame, you know. And then there's also a new HBO documentary called The Inventor, I believe, which I just watched as well, which put some visuals to everything I was reading, which was cool. So yeah, check both of those out. Anyway, point being, staff revenue and raising money and valuations mean jack all.
Yeah, exactly. And I think that the media lavishes praise on these companies, right? So if you follow TechCrunch or any of the big media publications, that all you hear about is people raising money, people hiring, people growing their revenue, and like that's all really nice. And I think it's easy for the first-time entrepreneurs and some experienced ones to get sucked into this vortex of like what it means to be successful, right?
Yeah.
And you need to just understand what success looks like for you, right? And is it that, hey, I've got $1 million business, yeah, I've got a handful of staff, but I only work, Tim Ferriss, 4 hours a week. I can play the drums, during the day, and no one really cares. Is that success look like for you? And for you, that is the ideal lifestyle for a lot of people.
Yeah.
And so I think what I want to say is just really understand what success looks like for yourself. And is it to scale and take over the world, or is it just to have a really good cash flow producing business that allows me to do the things that I'm truly passionate about? So, knowing your numbers really helps a lot with that, because it helps you. Knowing your numbers will help you understand, if I should hire people, do I have the cash to draw from my company and give myself a holiday every 6 months. So these are using your company as a vehicle to give you architect or engineer the outcomes you want as a founder.
Nice. Yeah, that's a good quote right there. But yeah, and I see people hiring for the sake of hiring all the time, just for growth, and people like I guess idolizing these companies that have a lot of employees, and like you say, and then really these companies are making no money sometimes because they've got so much fixed costs, like offices and big offices in prominent areas with lots of expensive employees, and and in the end they're not actually making any money. Like it's crazy. So I assume that there are ways you can help people learn their numbers, and like your book, for example, is that a good place for people to start?
Yeah. So so the book's a great segue. So my accounting firm, we work with a lot of digital agencies, but we're kind of hamstrung because we are expensive. I'm like every other professional service business. So the clients that we work with, generally you need to be doing basically $1 million of revenue to kind of get the value that we provide. Excluding bookkeeping. And so what the constant challenge I was getting was a lot of founders were coming to me and I need to know this stuff, but would I learn it? And I would always refer them to business books if I could. So Profit First is a book I used to refer to people because the principles of Profit First are good, but there's some inherent flaws with it, which we can possibly discuss in a separate episode. Sure. I've written a blog about it, but like what I found was that there was no book I could give people to say, hey, you should read this. This will cover the kind of 20% of numbers stuff, which will give you 80% of the leverage to know your numbers, basically, of your business. Yeah. And so, I wrote it. It's pitched as kind of the barefoot investor for entrepreneurs, or maybe the 4-hour work week for finance, but targeted at founders who probably, just starting up, want to get on top of their numbers and learn some basics, which can help them set them up for future success.
Awesome. And where can people go to get that?
So you can find the web. So we have Stark Naked Numbers is the title of the book.
That was just again slower. Stark Naked Numbers. No, it's all good. It's just on audio, and I know people speed it up as well, so that would have just come through as.
I talk really quickly, if you can tell. Starknakednumbers.com is my website. It's available via Amazon. So just search Stark Naked Numbers. Make sure you add numbers to Stark Naked because there are some questionable content.
Yeah, that's brilliant. Like, I don't know. Did you predict that? I imagine you would have. I don't know.